What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about the most important bar formations when it comes to trading. Okay, so the other day I made a video on the massive trade that I caught on SMCI, and today I wanted to kind of go back to that and look at exactly what bars actually can tell you, hey, maybe I should be getting into a trade. Maybe I should be getting into a trade. Or maybe I can get some insight as to what is going to happen. So there's a ton of different bar formations here, really good classic bar formations that you can pay attention to when trading. So I like to get right into the video, so let's do it. So the first bar formation is what I like to call a slingshot doji. Slingshot doji. It's just a hammerhead doji where there's a head, there's a long bottom side wick, long bottom side wicks at the bottom of a downtrend like this, huge sell off, bottom of a downtrend, shows you buyers are stepping in. So keep that in mind. Bottom side wick, buyers are stepping in. Automatically, you can anticipate a reversal or potential consolidation and then a move to the upside. But we know buyers will most likely step in. So that's number one. Now, the next thing that we're going to have to talk about is this bar right here, the next bar. So this next bar is called the trend bar. Why is it a trend bar? It's a bar that contributes to the direction of a trend. So it's a bar that is big enough to actually help the trend move. Okay, so this is a trend bar, a green trend bar, a bullish trend bar. Now, a bearish trend bar would be something like that red bar right there. That's a big red bar. It can contribute to a downward move. Okay, so pay attention to those bars. Typically, when you get a nice big green bar, a good entry would be one tick after. So on the next bar here, and then you see we do get a continuation in the direction of this trend. Okay, so one thing that the next bar actually that you want to pay attention to is these bars here. These little bars are called non-trend bars. Non-trend bars. Non-trend. So they're so small, they don't contribute to the direction of the trend. They typically cause consolidation. Okay, they typically cause price to go sideways. And you can see that happen kind of like right here. Again, non-trend bars, just small bars that really don't contribute to any direction here. But then again, the bigger bars, like these big red bars, they're trend bars. They actually contribute to the direction of the trend, and they can help you understand where the trend is going and where you want to enter in. Okay, but when you get these little small dojis going sideways, you don't want to enter after any of those bars ever. Do not do that. Do not do that. Okay. All right. The next bar formation that I would like to definitely go over is called an overexhausted bar. Okay, an overexhausted bar. Now, there's a very good example of this on NVIDIA, which is why I'm going to go back here because someone asked me, like, what's the difference between a trend bar and an overexhausted bar? They were like, I feel like all trend bars are overexhausted bars. No? And I was like, no. Let me show you what an overexhausted bar looks like. So this is, let me go back a little bit here. Boom. All right. So this is a trend bar here. It's a nice green bar, contributes to the upward move of the trend. Okay, trend bar here. Let me point them out. Trend bar here. Trend bar here. And holy moly, would you looky here? This is Goliath right here. This is absolute Goliath, okay? This is 103, 104, 105, 106. This is almost a $4 bar. This is what we call an overexhausted bar. Overexhausted bar. So overexhausted bars are typically followed by an immediate reversal, okay? Because there's too much order imbalance. So in terms of supply and demand and economics in general, stop thinking about just the stock market. This is about economics. This is about money, okay? There can't just be buying. That's weird. There can't just be buying. Where there's buying, there has to be selling. There has to be an equal amount. So if there's too much buying and not enough sellers, then order is imbalanced. We need the same amount of sellers to come back to quell price, okay? To satisfy price balance, okay? It's just the law of price. Really, it's called auction market theory. Anyways, so overexhausted bars are typically followed by an immediate reversal. So anytime you see a bar that's way too big, just know, oh shoot, a reversal's coming. The next type of bar formation I want to talk about is a micro double top. What is a micro double top? So it's when a bar opens and closes, or a bar opens and then the next bar closes immediately after at that same level. When you and that again is a sign of a reversal, and then followed by a huge topside wick is another sign of sellers stepping in. So topside wicks, sellers stepping in. Okay, topside wicks, sellers stepping in. And then again, you see it here, micro double top. And then topside wicks, another bar formation I want to talk about. Topside wicks shows you sellers are stepping in. Topside wicks, sellers stepping in. Okay, that's enough for today. I think there might be a couple other bar formations. Let me see if I can find one here. If I do, and we also have the micro double bottom, which is when there is a close and then an open at the bottom right next to each other as well. That is a sign of a reversal to the upside. Good stuff. That's it. But yeah, that's all I had for you guys today. Some pretty good bars. Like, I think it was at like 4 or 5 bar formations. If you see these, it's literally guaranteed what I said is going to happen. So just keep that in mind in terms of price action. A lot of people don't know price action. When you read these bars, when you see these bars form, it tells you a lot about what's going on in terms of buying and selling. So hopefully that helps someone out there. You guys keep tuning in. If you want to see something, drop it in the comments. It's Mr. Fit to Flourish. And your boy is out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,